This content is for educational and entertainment purposes only. It does not constitute financial advice. Always consult a qualified financial advisor before making investment decisions. The top gainer today is DELL, with a staggering 32.76% increase, making it the stock to watch. The S&P 500 is currently trading at $7,580, with a 0.22% increase today, indicating a positive market sentiment. The VIX, often referred to as the Fear Index, is trading at 15.3, with a 2.67% decrease, suggesting a decrease in market volatility. The current market conditions are favorable for stocks, with the S&P 500 hovering around the $7,500 mark, which is a relatively high level, and the Nasdaq is around $25,000. The yields are not explicitly mentioned, but the general sentiment is that higher rates could lead to higher discount rates, resulting in lower equity valuations, especially for growth stocks. DELL is outperforming most of its peer group today, with a 32.76% increase in its stock price, reaching $420.91. This significant price move can be attributed to its strong earnings track record, with 3 out of 4 quarters beating expectations and a last quarter surprise of plus 62.2%. The analyst consensus is a strong buy, with 73.5% of analysts recommending a buy and only 2.9% recommending a sell. The upcoming FOMC meeting on June 17th could have a medium impact on the stock, as higher rates could lead to lower equity valuations. The options market is neutral, with a put-call ratio of 1.03, indicating no strong directional signal. In comparison to its peers, DELL is leading the pack, with its revenue growth of 87.5% year-over-year being a key driver of its success. The industry signals suggest that the technology sector is gaining momentum, and DELL is at the forefront of this trend. As we look to the future, it will be essential to watch how DELL performs in the face of potential interest rate hikes and how it compares to its peers. OKTA is the second top gainer, with a 30.14% increase in its stock price, reaching $123.27. The analyst consensus is a strong buy, with 73.6% of analysts recommending a buy and only 3.8% recommending a sell. The options market is neutral, with a put-call ratio of 0.92, indicating no strong directional signal. In comparison to its peers, OKTA is outperforming, with its revenue growth of 11.2% year-over-year being a key driver of its success. The cross-asset signals are providing a mixed picture. Bitcoin is trading at $73,325, with a 0.33% decrease, indicating a decrease in risk appetite. Gold is trading at $4,549, with a 0.96% decrease, suggesting a decrease in safe haven demand. The price of oil is not explicitly mentioned, but the general sentiment is that higher oil prices could lead to higher inflation, resulting in a more hawkish Federal. The combination of these signals suggests that the market is cautiously optimistic, with a focus on the upcoming macro catalysts. The FOMC meeting on June 17th and the CPI inflation report in 10 days will be crucial in determining the market's direction. The action plan for the next 5 sessions is to keep a close eye on the top gainers, DELL and OKTA, and their performance in the face of potential interest rate hikes. It will be essential to monitor the options market and the analyst consensus, as any changes could indicate a shift in market sentiment. The upcoming macro catalysts, such as the FOMC meeting and the CPI inflation report, will be crucial in determining the market's direction. A long position in DELL and OKTA could be considered, with a stop loss at 10% below the current price. Alternatively, a neutral position with a focus on hedging could be considered given the uncertainty surrounding the upcoming macro catalysts. In conclusion, today's market has been characterized by a significant increase in the stock prices of DELL and OKTA, with a strong earnings track record and a favorable analyst consensus being the key drivers. The cross-asset signals are providing a mixed picture with a focus on the upcoming macro catalysts. As we look to the future, It will be essential to keep a close eye on the market's direction and adjust our positions accordingly. Thank you for watching, and we will see you in the next video.